All right, what up, everyone? Welcome to another episode of the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's going on, Wale?
Not much, man.
Yes, sir. I know we're talking about the whole think and swim glitch this morning. I know it pissed a lot of people off.
It ended my 3 week trading streak.
It's bound to happen, man. It's bound to happen.
I
You
know every streak comes to an end. To be honest with you, I could have got out of the trade I was in yesterday with like a 5 or 10% profit because it was really, really choppy and I could have
hmm
just got out, but I decided to hold it and it just, you know, it didn't go as planned. But we reset and we start a new week to Monday. So
Yeah, but that glitch was I was kind of upset about it, man. I think it happened like around 9:45 a.m. today, and just I don't know. Yeah, some stuff just went down. I think they probably had like an outage or something. But yeah, it wasn't a good timing to have that issue, man. I think a lot of people probably pissed at TD for that. So we'll see what happened with that one.
yeah.
But overall, man, we closed today kind of in the negative a little bit. Overall, the week, I mean, we're up, but today we closed in the negative a little bit. The S&P was down to 0.3%. It pulled back from the yesterday's record low close. Dow Jones was also closed at 0.6%. Nasdaq eased at like 0.2%. Russell was down 1.3%. I think Russell was down mainly because of the whole Canada tariffs and all that stuff. So it's kind of like pushed it down a lot more. Even though we went down a little bit, we closed the week positive. I mean, if you look at overall market, the performance year to date, we're positive. S&P's I think is up 6.4%. The Dow Jones is up 4.3%. Nasdaq is up 6.6. Russell's up 0.2%. I mean, Russell's kind of still lagging behind, but overall, I mean, we're doing really good. Some of the key drivers, I mean, again, with Trump announcing 35% tariffs on Canadian imports effective August 1st, which I don't know if they're gonna go through. I think we're gonna get to August. And we're like, we're gonna give another month. I don't know. I don't know if it's gonna go through. But overall, that the announcement came out today, and I think that's gonna like drop the market a little bit down. But again, anytime I feel like the market hears tariffs, something just goes sideways and all of that stuff. So
To be honest with you, the thing that I find very, very crazy is I really don't think like all of these countries are lining up to make trade deals like that. I don't think.
yeah,
Basically, I think what happened was he just said, "Hey, this is what it's going to be. If you don't call and negotiate, it's just going to stay that way."
yeah,
I
yeah.
don't think I don't the whole like we've got a whole bunch of countries lining up to talk to us and all that stuff. I think that was all a hoax because I'm almost certain that most countries didn't even pick up the
They
phone.
didn't even bother. They didn't even bother.
They didn't even bother. So
Yeah, because America is one of the biggest importers. So a lot of times we depend on everybody else. So it's like, how do you set that level of tariffs on people that you buy stuff from? A lot of countries don't import stuff from us. If they import, it's probably really, really specific stuff they import from us. So again, it's kind of very hard to come to a negotiating table when I'm really not importing a lot of stuff from you. So it's like, what are we negotiating? So
yeah,
I
we'll
don't.
see. We'll see how the story plays out.
Yeah, but I know they're trying to get people to come to the table. So we'll see what happened with that. You know what I mean? So, one of the other things I want to talk. I know I sent you this a little bit. MP Materials, they just entered them into a multi-billion-dollar partnership, strategic partnership with the U.S. Department of Defense. Like, that's crazy. You know what I mean? Like, DoD actually owns almost 50% of that stock, which is ridiculous.
Sheesh.
They invested about $400 million into convertible stocks, equating to about 15% ownership stake, and secured warrants, becoming MP's largest single shareholder. Like, how is that possible?
To be honest with you, I didn't know that the DoD or could own individual stock positions.
And that's for me. That's like, wait, what?
That's actually pretty crazy.
Yeah. So I'm like, oh, and if you guys look at like on Thursday, I think the stock just shot up like almost 12% or something like that. It went up like crazy. Um, this deal includes a 10-year price floor of 110 $110 kilogram for NdPr rare earth elements, an offtake agreement to buy output from MP's forthcoming 10x magnet manufacturing facility. So it looks like this is a deal for rare earth element, which is,
Yeah.
I mean, I just think it's very, very interesting. Again, kind of like what you said, like how does a department of a government owns shares in a company?
Hmm.
Like that's for me, that's very, very interesting. But here we
Benson
are.
said, "Is that legal?" Supposedly, it's legal. I mean, nothing has stopped it. So, and I understand the reason why because it's because a lot of those rare earth minerals come from China, and I know that they're trying to decrease dependency on China when it comes
Yep.
to those things. So
Yep.
I kind of get it, but I didn't know that the DoD would make that move. But we'll see how that
Yep.
plays out. So,
Yep. But go look at that stock, man. I think it sold like over 50% this week alone. I mean, like it's crazy.
and I'm
But
pretty sure there were some insiders that made money on that move.
oh, of course. I mean, that goes without saying.
Exactly.
That goes without
Exactly.
saying. I won't be surprised if some of those people who sit on the board of like energy or earth or whatever board they have, I'm pretty sure they have something in there already.
Oh yeah. Easy.
So so let's pivot. Let's pivot to the jobless claim, man. The trends and what's going on with the jobless claim. I mean, for the week ending July 5th, 2025, initial jobless claims dropped by 5,000 to 227,000 seasonally adjusted. That is
Hmm.
well below analyst expectation of 235,000. I mean, we talked a little bit about that too. It's like, are we really adding new jobs or just rehiring people who already got like lost jobs? You know what I mean?
So
So
so this is what
let's
I
talk
was
about that.
able to dig up. So I looked at the 4 week moving average trend of jobless claims, and it's actually moving lower.
Mm,
And they're saying there's some labor market stability, but you're starting to get mixed signals because of private sector layoffs. So Microsoft, Meta, Google are slowing their rehiring and keeping people unemployed longer. And then another thing that hasn't necessarily changed is people who are continuing to receive unemployment. That number has been pretty steady.
mhm.
So one of the things you mentioned is are some of the public sector folks who were fired by the government just going back to work? Because I'm getting mixed signals. Private sector, though, at least from what I'm seeing and from what I'm hearing and looking at the data, private sector job hiring is slowing down. So that is a fact. So how unemployment went to 4.1%, I don't know the exact math formula behind all of that, but yeah, just right now, from what I'm seeing, the trend is down, but there are other things that aren't as rosy when you're looking at, okay, if we're getting less jobless claims,
Yeah,
then that should mean that more the people who were unemployed should also hopefully be going down. And maybe there should be more private sector hiring, but that's not the case. So
that's crazy, man.
yeah,
That's
so there's
crazy.
there's definitely some mixed signals and mixed things going on right now with the job market.
I mean, that's gonna for me. That's an interesting trend. But like you say, compared to where we are during COVID to now, I mean, it's we definitely lower than we're doing the COVID. I
Oh
was
yeah, for
looking,
sure.
I was looking at some historical jobless claim comparison. So in the late '90s, during the tech boom, the typically weekly claims were around 280,000 to 320,000 jobless claims, right?
Ooh,
And then during the Great Recession, 2008 to 2009, it was about 550,000 to 670,000. There was a massive layout across industries, right? Because of the whole stuff that was happening. And then we move forward to 2010, 2019. I think that was like kind of the recovery time. Like, I think that was like time was good. We had about 200,000 to 300,000 jobless claim every week. I mean, that's still kind of a little high, but it's not as high as, the previous years. But then COVID hit. We had 3.3 million to 6.9 million in March alone. I mean, that's given, right? Because we had like all these shutdowns and lockdowns, and people had no idea if they're
yeah.
gonna have a job and all this stuff. So that number jumped like crazy, right? But then you look at 2021 to 2022, that number dropped all the way down to 400,000 to about 200,000. And then when we had the whole rate hike cycles, 2023 to 2024, That was about 210,000, $250,000. Now we're sitting around 227,000 jobless claims. So again, going back to what you say, overall, the numbers are going down for when it comes to jobless claims. So again, that might be because people who got laid off are getting jobs, or people just not probably still have some money left over, and they're not really going into like um, filing for unemployment claim and all these different things. So I mean, yeah, I agree with you that the numbers are definitely going down.
Yeah, we'll see if this is incentive for the Fed to cut. We got our next Fed meeting on July 30th.
Yeah.
So I don't think we're going to get a cut this month, but people are saying um, when's the next meeting? So after July, there's no meeting in August, and then there's a meeting in September, and I guess that's when everybody's anticipating that we're going to get our first rate cut. So we'll see how this plays out.
But is not an incentive for them to cut rates though, right? Like if the job's
If
not
if if how should I put it? If the labor market is healthy, it is possible to possibly see one rate cut. I don't know about two, but one. To me, I would only cut rates if I saw a spike in in uh in the unemployment numbers. And I say, okay, people, I need to ease the tightening of the bond market.
right.
But if people are saying that the Fed is way above the restrictive level, like, I have to go back and look at what level they consider restrictive. If they're too restrictive, then possibly one cut. But if, I don't know. I'd say one cut could warrant a good labor market. If we see trouble, then I would say that then you probably want to make a more bigger cut instead of making a 25 basis point cut. Maybe you cut by 50, 75, or 100.
Yeah, yeah.
So, but we'll see because again, we didn't get our first rate cut until late last year, and we got our two cuts. So we'll just have to wait and see if the same thing happens this year. But I just I'm still wary about what happens if we start to see tariff affect, start to affect inflation. That
Yeah.
the fact that we haven't seen it yet is I don't know the science behind that,
Right,
but
right.
you know, I don't think we won't see it at all. So I think it's just a matter of time.
Yeah, but we need for it to take like a good effect for a whole quarter. You know what I mean? Like I
Yeah.
don't think we have seen that just yet. So,
Hmm.
but overall, we'll see how the market reacts to like kind of tariffs and all these different things. But overall, I mean, in conjunction with that, is like we see the market kind of like moving higher. Like the market's still in the uptrend. People are buying the dip like crazy, yeah, crazy. You know what I mean? So I guess we talked about this. I believe, like I don't know when we talked about this when the market was running up like crazy. Like, is this a good time to buy? Should people be buying right now? I mean, are we at that place right now? Because I'm looking at all the momentum. Everything is going up. We got like tech names like Nvidia, Microsoft, Amazon are going up like crazy. We see some crazy valuation. We see a lot of different things that's happening that's actually driving the market a lot higher. So, is this a good time as an investor? One, to buy stock, and two, is this time to just sit back and kind of wait for a pullback if there's a pullback? Because we talked about this too. The market can be going up for a long time. So, what is the good strategy right now?
So I think what's driving the market, to be honest with you, is I think there's a lot of fund managers that are playing catch up. There are a lot of fund managers playing catch up that were sitting on the sidelines, were indecisive, didn't make
Mm-hmm.
any moves, and now they're making all the moves that they should have probably made back in April. So I think there's a lot of that happening right now. Now, with markets trading at all-time highs, there might be a trigger in someone's head that says, should I be buying stocks now? And coming from somebody who's been a financial advisor, in the past, you should always be buying stocks. To me, you should always be buying stocks, whether the market is trading at all-time lows or all-time highs. Because again, remember this. Now, it depends on what type of investor you are, because the strategy for someone who's buying mutual funds versus someone who's buying ETFs versus someone who's buying individual stocks can be slightly different. But I still feel that regardless of market conditions, you should be a buyer. Now, let's just say you're someone who buys individual positions.
Mm.
Let's say you buy individual stocks. The only thing that I would probably change is the aggressiveness at how I'm buying those stocks. So let's just say every month I'm spending $500 buying, let's just call it Microsoft, I don't know, or Nvidia, and I'm constantly making those transactions every single month. Now that we're all-time highs, instead of maybe putting in $500, maybe I scale back a little bit and save more for a potential pullback that we could see in the late future. So maybe instead of doing 500, maybe I could scale down to maybe 300 or maybe 250, keep more in cash that I can then use if we see another major pullback in the future. That's how I would do it. Because at the end of the day, it's all about share accumulation.
Right.
The more shares you own, the bigger the impact those small incremental changes in the stock price are going to affect your portfolio. So, 1% of 1,000 shares is different than 1% of 1,500 shares in a price move, depending on how much stock you own. 2% of 200 shares is very, very different than 2% of 500 shares. So the more shares you accumulate, the better the results will be when the trajectory of the stock starts to move higher. So again, this just goes back to what we talked about back in March and April. When the stock market is dropping, you probably want to be a more aggressive buyer.
Yeah.
When the stock market's trading at all-time highs, you still want to be a buyer, but maybe you don't want to be as aggressive. If you're a mutual fund investor, right? Like, let's say you're putting in, I don't know, $200, $300 into your 401k every single week or every 2 weeks or whatever your payroll schedule is, that you don't stop. You continue to stay on that trajectory because with mutual funds, you're not actually owning the individual stocks. You're just owning a piece of the fund. So therefore, you never want to stop that transaction regardless of what the market is doing. Now, again, going back to if we see a major pullback, then you probably want to be in a more aggressive buyer.
Facts.
So that's how I would strategize my, you know, portfolio if I'm an investor now and I'm looking at, okay, we're at all-time highs. What should I be doing? Should I
Right.
still be buying? Yes. How much you buy or how aggressive you are, maybe you need to scale back a little bit. Also, too, depends on your time horizon. If you're someone who's probably going to need the money in a short period of time, let's say you're putting in, let's say you've been saving money in the stock market for the last 5 years to buy a house. You're anticipating you're getting closer to your goal to buy that house maybe in the next, 6 months to 12 months. Probably don't want to be too heavily weighted in stocks at this point. You probably want to start taking some money off the table.
Yep.
If you have concentrated positions, let's say 90% of your position is like Nvidia or 90% of your position is Microsoft, and you've seen a very, very, very good run. Obviously, you want to measure what the tax consequences will be. Are you going to be paying short-term capital gains or long-term capital gains?
Mhm.
Maybe it's a good time to start taking some money off the table and holding it in cash or reinvesting it in other sectors of the market that probably have not been doing so well.
Right.
So every investment strategy is different, but I would never there will never be a point in time where I would tell myself I'm not buying stocks. So that's how I would look at it.
I mean, that's a good one because like if you sit on the sideline for too long, you're gonna miss opportunities.
Yes.
So
And you're never gonna time the bottom. Like you'll
no,
never ever gonna time the bottom.
no, absolutely not. But when you see pullbacks, I think it's a good time to start deploying some money. You know what I mean? Especially start seeing like 10%, 15% pullbacks in any of those sectors. That's a good time to start pulling some triggers and all that stuff. But I want to get your opinion also on one thing that I read about JP Morgan. They recently highlighted, I don't know, they call it wall of money, right? Expected to flow into the US equities in the second half of 2025. Like they estimated about $500 billion in new inflows that's going to come in. And 360 billion is going to be from retail investor resuming buying after mid-year pause. And then a 50 to 100 billion from foreign investors as the US dollar stabilized. I don't know. Every time I hear something from you from JP Morgan, I feel like it's always fishy to me. You know what I mean? It's
Did
like,
wasn't Jamie Dimon the same person trying to scare people talking about
yes, yes. I feel like they're already in position. So now like, okay, we're in position. Go ahead and buy stocks. You know what I mean? So I don't know, man. Whenever they talk like that, I was like, yeah, most of these banks, most of these big investors, they don't do stuff like that out of the kindness of their heart. You know what I mean? They don't just tell you like, oh, the stock market is gonna go up. You should buy it now. Like, nah, there's always something behind it. You know what I mean? And people, I just tell people all the time. Whenever you see those rich investors and rich, banks and all that stuff, either one, they're scaring you from doing something, or two, they're encouraging you to do something. Think the opposite. That's been my strategy. If they're scaring me, I'm buying. If they're
Mhm,
encouraging me, I'm selling.
mhm.
You know what I mean?
Yeah, because I promised you couple months ago, Jamie Dimon was talking almost all doom and gloom, like we're about
Yes,
to see some catastrophic market events that was going
yes,
to scare everybody.
yes. And now he's singing all praises.
And now we're at all time. I don't know. I am and like I gave you we talked about this on Wednesday. Remember all those price projections for all of those big
Yep.
banks? Everybody's saying that the market still has another what 10% to possibly go higher.
Yeah.
So we had a question in the chat box. It says, I read somewhere there's a golden cross on SPY. Yeah, there is a golden cross on SPY. That golden cross happened on
Was
the
that Wednesday?
17th of June, where the 50 SMA, no, actually, I'm looking at the wrong one. I'm looking at the EMA. Hold on, let me make sure I'm looking at the right thing. Okay. Golden cross happened on July 1st.
I was gonna
So
say, I
this is
think it
what I
just
will
happened.
say.
Yeah.
Yeah, this is what I will say. Golden Cross, Death Cross, take all of those things with a grain of salt because when we got our Death Cross, right? Remember, we got that Death Cross. That was
Mm-hmm.
back in April 24, 2025. After we got the Death Cross, the market surged.
Mm-hmm.
So
Mm-hmm.
remember, simple moving averages are lagging indicators because they weigh all of the price action evenly across a certain number of days. So if you were an investor that said, "Oh my God, we got a death cross on April 24th,
Mm-hmm.
time to start selling stocks," guess what? You missed out on a really, really historic run.
Yep.
Remember, the death cross also came after we had that huge surge after the 90-day pause. So I know there are some people, I used to look at that and put a lot of weight on that as well back in the day.
Mm-hmm.
But what I've noticed is that you have to look at other factors that are going on around those indicators that will tell you whether or not you should be buying or selling. So, because the way I look at it is if you look at the 200 around that death cross time, right? The 200 was still kind of flat. So it wasn't trending down. Now, if you go back to, I'm going to have to go to a chart and let me let me go back. Maybe let's go back 4 years. Now, when you get a 200-day moving average that is starting to curl down, like you kind of saw back in 2022 of April. So 2022 of April, you look at you get a death cross, right? The death cross happened in March in 2022. Then you start to see the 200-day simple moving average start to curl down. And if you go from April 20th to June 15th, the market was trending downward. So when you look at the death cross or you look at the golden cross, whatever it is you're looking at, I would also look at what type of trajectory the 200-day moving average is moving on. Is it flat? Is it curling down? Is it curling up? Those things also to play a factor in what I would be looking at. So yeah, don't just look at that one thing and say this is the tell all be all what
Yep.
probably is going to happen.
Yep.
There's
Yep.
probably other indicators or other things that you possibly should be looking at because I'm looking at, yeah, here's another one. Here's another golden cross, right? This is back in February of 2023. Initially, the market started to move down, but the 200-day was kind of flattening out. And then you see a huge run in the market in 2023. So a lot of things play into that picture when it comes to looking at those technical averages. But again, simple moving averages, a little bit more of a delayed reaction to what is
Yep.
going on.
Yep.
Because let's just assume that you got your golden cross in June, right? In July. I mean, you missed the entire run from
You miss
April to
a whole
May.
run. a
Like let's
whole
just say
run.
you're waiting for that golden cross.
Yep.
And that
Yep.
might be why we're seeing people catch up. It's because
Yep.
whoever those big institutions that might have been waiting for those indicators, right? Maybe they're starting to buy now. Maybe they're late to the
Mm-hmm.
party. So, which is
Mm-hmm.
why I always tell people you should always be buying stocks.
Yep. Yep.
Always be buying stocks
Yep. Either that or learn price action, yo.
or
Like
learn price action. Yeah,
price
learn price
action,
action.
it'll get you in positions a lot sooner before everybody start getting in. You know what I mean? When you start seeing the
Hmm.
market creating a higher highs and a lower or lower lows, like you can kind of know what direction the market is heading. You know what I mean?
Hmm.
So get used to like looking at those and look at multiple time frames. Like don't look just at the daily. Look at the daily, look at the weekly, monthly, yearly, quarterly, 6 month. Look at what the trend is going. You know what I mean? That will give you a better understanding where the market is heading, and then
Correct.
you can kind of make analysis of it. But trade price action for me is the number one thing I think any trader should learn. Just understand where is the price going and look at that. And then you can start looking at the crossings and all that. Because I guarantee you, kind of what they said, by the time you realize the crossing, you probably missed a whole big move after the
Hmm.
crossing. Because you gotta realize like those indicators are lagging. Like the crossing of the 50 and the 100 and or 200, whatever, those are lagging indicators.
Yeah.
So they're good, right?
Yeah.
But
They're helpful.
yeah, but it shouldn't be the only thing you rely on. That should not, because by if you just rely on that, I can guarantee you probably miss a lot
Yeah.
of moves.
I used to put a lot of weight into those things before, but
Mm-hmm.
then I started to realize that a lot of times you're either late
Yep,
or you might be too early or you
yep,
get mixed signals. So,
yep,
there are
yep.
good things to know and good things to look at, but don't let that be your end all be all when it comes to investing or trading.
Yeah, that shouldn't be the only thing you're looking at. Overall though, let's look into next week. I mean, we have CPI coming up next week. Actually, before we hit that, I want to talk about some of the lagging sectors. Like if you guys are paying attention, we have a bunch of sectors that are just lagging behind, right? So if you look at utilities, they're underperforming due to high bond yields. Real estate is down. Consumer stable is down. Healthcare is kind of flat. Like there's
Hmm.
nothing going on there. You know what I mean? Financials, it's mixed signals, right? It's kind of
Hmm.
like we right in the middle. Energies moving sideways. Small cap down. So some of those things, like if you start looking at those sectors that are not doing good, there might be opportunities there for a long term, right? Because those are the places that you want to be in for the next 5, 6 years, or maybe 10 years. So if you one of those person who like low risk and you want to start looking at like something that you can get in right now and be able to hold for the next 5 years or maybe even 10 years, start looking at some of those underperforming sectors and start figuring out where you can be in. If you look at IWM, IWM hasn't gone nowhere, man. Like it's getting beat, right? But if the market and all this volatility can get out of the way, I think IWM will be one of the really big ones to focus on. But again, as an investor, you want to think about 5, 10 years from now. So start looking at those sectors that is getting beaten and be able to find opportunities there. Now, if you're one of those investors who want to find opportunity in the next five, maybe like 1, 2, 3, 4 years, you start looking at the ones that's really, really doing well. And any pullback should give you an opportunity to get in. So I just wanted to give that quick tip on that.
Yeah, so if you're a value investor, right? So you're looking for value, you're looking for underpriced stocks, things that have not done so well. This is when you start looking at all the sectors that Billy was talking about, healthcare,
Mm-hmm.
energy, consumer staples, utilities, because when growth stocks and the trend is moving higher, real estate, the defensive sectors tend to lag. And then it flip flops, right? When the other growth sectors aren't doing so well,
Yep.
then that's when you start seeing the defensive sectors start
Start going
to
back up. Yep.
start going back up. So there's
Mm-hmm.
usually sector rotations and things like that that happen across different market cycles. So value investors, right? They're probably selling some of their growth stocks and looking at other
Exactly.
places to position assets so that they can ride the next wave if there is a pullback. So they're,
Yep.
they're positioned to ride that um, wave in the other sectors like the energy sector and the
Mm-hmm.
real estate sector, utility sector, and things like that. IWM is a very intriguing index because it is the only index that has not made an all-time high yet.
Nope. Nope. Because he's getting beat like every
Yeah,
single time. It started to go back up, you get beat, tariffs, this and that. It's like, yeah.
yeah. Because I'm looking at the I'm looking at the, let's see how far, let's go back. Yeah, all-time high for IWM is 244. We're at 221. If you look at the monthly, we have tested this. I'm looking at the monthly chart. Am I looking at the monthly chart? Yeah. No, I'm looking at a yearly chart. They are in the middle of a yearly fair value gap right now in IWM, and it has tapped that gap and respected that gap one, two, three, four times. Now you've got, I guess this yearly candle looks, it's a bullish. It's not necessarily a hammer candle because there is a wick at the top, but
Yeah.
there is potential that IWM could be playing catch up.
Yep.
Again, I will say that when we start getting rate cuts, IWM is going to run.
There you go. I was just gonna
So,
say that.
yeah, when we start getting rate cuts, IWM is probably going to start running because small caps
Mhm.
tend to be the biggest beneficiaries of rate cuts because
Yep.
they depend a lot on financing and and things like that. They reinvest a lot of their profits. They're not profitable. They're what I call the hyper growth stage.
Yep. Yep.
So if we start getting rate cuts, if the market doesn't necessarily start to see anything that makes it nervous or starts ruffling the feathers, I would, I'm looking at some of my allocations to small caps. I'm at like 5% now. Maybe I boost it to 10%,
Yeah.
take some money
Yep.
off the top from large caps and things like that. So, but yeah, IWM, I'm not saying I would be a aggressive buyer yet, but if you're
No,
looking for a
not yet.
trade that could catch up over the next couple of years, you know, that would be something I would definitely take a look at. It's crazy how a couple months ago everybody was saying recession. I haven't seen. I'm not saying that it's completely off the table.
Nobody's
I
talking
I,
about that.
I don't want to, but I have not heard anybody say anything about recession in the last couple of months. So
Everybody's kind of quiet about it. Again, Jamie ain't talking about recession no more or inflation. He's not screaming out the top of his lungs. You know what I mean? Scared everybody, made some money, and now he's saying that money's coming in. So again, just pay attention to those little words that people keep saying, man. But
I will say this though, I'm still a little bit cautious. I said this on the last show.
hmm,
400, somebody put $1 million on 400 QQQ strike puts
did they close it?
expiring.
Did they close it? It's still open. Okay.
So I
Some is
think
coming.
I think that expiration is August 5th. So go to the August 15th 400 strike puts for QQQ. Somebody put $1 million on that trade. I don't know if it's a hedge. I don't know what it is, but that is a nasty, nasty trade if you're bearish. Also saw lots of trades for the 32 VIX.
Hmm. Again,
Very bearish. So I don't know what the story is behind that because again, sometimes you see these big old trades and nothing happens.
mm-hmm, mm-hmm.
Sometimes you see these big old trades and something actually does happen. Like remember last December before Powell did his press conference, I think December 18th, we were loading up on like the 30 strike puts
Yep,
before FOMC and we cashed in big time.
yep, yep.
Right now, I don't see a catalyst that will get us to like 400
Yeah,
from where we are.
that's a big drop.
That's
That's
a
almost $150 drop
that's
right
a
there.
big drop. So there has to be some sort of major event to get that kind of drop. That's why I keep saying maybe somebody knows that Iran might have got some nukes, might be getting some nukes off in August or something. I don't know. But
Some strange is happening. We don't know what it is, but
yeah, I don't know
some is
what it is, but
happening.
that position has not been closed according to the information that I received. So I will be watching very closely
Sheesh.
to see what happens with that trade. Could be
That's
it could
crazy.
be a hedge. Like I said, it could be a hedge. But
That's
to me,
crazy.
this is what I will say. Most institutions who will hedge positions, they're not going for a $400 strike with the stock straight with the ETF trading at 5
Nope.
plus.
Nope.
That's that's what I'm saying. To me, it's speculation. When you go
Yeah.
that far off the money, I smell speculation.
Mm-hmm. Mm-hmm.
So we'll have to see. Core weave puts. I would be cautious with core weave because the what do you call it? What's the word? The lockups are coming up in September.
September. Yep.
You could see more selling because I think they were down pretty big today. A lot of people are not in love with that acquisition of um, Core Scientific. Yeah, CoreWeave was down 9% today.
Ooh, they pulled back.
So
They pulled
yeah,
back big time.
a
This
big
whole
time
week.
pullback. Yeah, they've been down pretty significantly over the last couple of days. So, like the business, I don't like their debt load personally, but I missed that opportunity when I could have gotten at 33 and that thing just went to 125. But you could see some selling when the lockups do expire in September. So if you are in CoreWeave, just be mindful that that could happen. So I would just throw
That's
that out
crazy.
there.
That's crazy.
So
But moving on to next week, man, we have a bunch of um earnings season starts next week. So we have the banks reporting July 15th. We have JP Morgan Chase, Citigroup, Wells Fargo. They're all reporting next week. And then we have Wednesday, Goldman Sachs, Bank of America, Morgan Stanley. So we have some banks reporting next week. Now, the expectation is they're going to report some strong revenue. They estimate around $26.4 billion in equities and fixed income, roughly around 11% year over year increase. So we shall see how the market's going to react to that, because that's a lot of banks reporting next week. So keep an eye on those ones. Any prediction on that one at all, like in terms of how the bank is going to you know
the only one that I would be looking at personally, I need to pull this back up on my phone. So me and my trading group last week, we rode Citigroup for a really nice move because we saw some big, you saw $4.2 million trade that came in at the 90 strike. And if I am not mistaken, that position has not been closed.
mm,
Let me go back to my, man, what expiration was that? It was the, yeah, 725 expiration. And that is on the 90 call. Where is it? Trying to find it. There we go. Yeah, there are still 55,000 contracts open in that position. I might do a YOLO on Citibank. I might get back into that trade. So, um,
saying,
yeah, I might get back into that trade because I know they closed some of their position, but they haven't closed it completely. So we'll see what happens. I'm expecting that they're probably waiting for that move. That's probably why they chose the 725 expiration.
yep.
We I think most of us got like 100% gain on that trade over the course of a couple days. So I might get back in that trade and ride the earnings and see what happens. So
Yep. And then we have some other ones also reporting outside of the bank. We have Johnson and Johnson and Abbott Labs on July 16th. Thursday we have Netflix. Netflix reporting after hours. And then we have some other ones like PepsiCo, 3M, SLB, American Express. So all of these are reporting. Now, this banking report is going to be important because it's going to show how tariff volatility is actually influencing, trading volumes, deal pipelines, and overall, financial markets. So that will be a good thing to kind of keep an eye on. I like the Netflix one because it's actually going to give us an insight into consumer spending. Like, is consumers
mm,
actually like spending? Because Netflix is kind of one of those, not necessarily a needed spending. So we can see if the numbers is going up or numbers going down or kind of flat. So that'll be a good something to kind of keep an eye on.
Shane asked a question, Lunar, what's going on? Yeah, Lunar was up 10% today, but if you look at what happened from a technical standpoint, you got a short block at 1160. So you got short sellers at 11 from 1160 to about 1180, and then it got rejected at the 200 SMA. So
Mhm.
it's got a lot of work to do. But if the shorts get squeezed out of those levels, then I would possibly see it has the potential to make a good move. But yeah,
Yep.
Lunar
Yep.
Lunar looked like it was about to be a really good trade until it died out. So
Mhm.
we'll see because if you go back to what date is this? 6-6, 6-9, and 6-10, you'll see that 660 area. You see multiple rejections in that zone. So hopefully, maybe if it finds the momentum to revisit that zone and squeeze the shorts, maybe it moves higher. But right now, I would just keep an eye on it. But it's got to get through 1160, that 1160 to 1180 area. So until then, Um, I would just be I'd be cautiously optimistic.
Yep, yep, yep. The other stock that made a really good move today was Amazon. I don't know if you guys pay attention to Amazon today. It made a really good move to the upside. We broke through that 224 area that was no 223 area that was kind of like stuck in there, but
Yeah, it
we
was
kind of
consolidating. Yep.
yeah, we broke through it. We closed at 225. So we see how next week is. I think they're reporting August, I believe so. But we're running into that 227 area now of resistance again. So we shall see what happens for that. But that's a really good move for Amazon. So we shall see.
I'm actually also looking at Circle to possibly make a comeback.
Ooh,
Uh,
that was a good one in a while. I
yeah,
haven't seen that in a while.
yeah, Circle has come down from 298 to 192.
Wow.
So I would like to see if this would possibly can find some support and if it can. There's a lot of shorts in that 200 level, and it tried to squeeze them out, but it did not hold. But we'll see if it can possibly revisit that area again and then squeeze those shorts out. But yeah, Circle has come down significantly from its almost $300 price target since the IPO.
Crazy.
So I will have that on my watch list.
Crazy, crazy, crazy.
But that's
But
it for me.
yeah, well, next week again, economic count. I think we've talked a little bit about that. We have CPI coming up, and then on Tuesday, July 15th, we have what I think we I thought we have PPI. PPI Wednesday, July 16th.
Yep,
Both
PPI,
both
CPI.
both of them at 8:30 a.m. So those will be some really good numbers to keep an eye on. But other than that, I mean, any last advice going into next week outside of those numbers that we just mentioned?
Nah, like I said, for anybody who's thinking if they should stop buying stocks because they are trading at all-time highs, again, I would say don't stop. Maybe you want to curtail how much you're putting in and be a little bit more um, cautious, like pull the reins back a little bit, store some cash. If we get a pullback, great. If we don't get a pullback, at least you still have, positions in good names. But
Yep.
never stop buying stocks. Ever, 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 ever. Another thing we didn't talk about, and I don't know what caused the move, man, Bitcoin hit what, 118,
117,000, 118. Yeah.
108,000.
Mhm.
And I remember that one wallet that bought what, 10,000 Bitcoin for 78 cents.
Yep.
Was it 78 cents or $78? I think it was 78 cents. 78
Well,
cents.
whatever it was, they bought a lot.
They turned $7,800 into over $1 billion.
Yep. But you have to be really, really patient though. Like that's crazy, right? To be able to ride. So you see like your 78, one Bitcoin turn into $10, turn into $200, turn into $500, then it turn to 10, 20, 30, and then it goes back to like 15, 10, 8,000, and then shoots back to 40, 60. Like you really have to like believe in the the instrument that you have, right? Because
Or
if
you
you
or
if you
you could have
don't,
just got or you could have got lucky and forgot your password and you just didn't know what to do.
exactly.
And you got lucky.
Yeah. Well,
Maybe.
there's this guy that threw his thing in the trash. I think he had like over 200 Bitcoins over there. He threw it in the trash and he could not find it. And I know there's a guy who has one more try on his wallet before it locks him down forever because he forgot the codes. He has one more try. I don't know if he tried it. I don't know, but it's like he has one more try before he gets locked out completely. So that's a bad luck right there. But
Crazy.
other than that, man, again, whether you're bullish or bearish, man, stay cautious because it's time to stay sharp right now. You know what I mean? So again, stay sharp, stay informed, stay disciplined, just pay attention to the market, and then forget to follow us, rate us, share the Wall
Correct.
Street with everybody that
I
you
think
can.
we are one more subscriber from 100. We need one more subscriber.
One more, let's get there, man. Let's get
I'll
there.
also say this too. As we move into August with this whole tariff stuff, headline risk starts to increase.
Mm-hmm.
So just keep that in mind. Headline risk starts to increase. So um, when Trump starts tweeting about tariffs, we've seen what happened in the past. Hopefully, we don't see anything of that magnitude in the future. But you need to understand that
You need to.
headlines dominate any sort of technical analysis you're looking at.
Facts.
So
Facts.
yeah, just keep that in mind because We're not out the woods yet, especially with the Canada getting slapped with 35%
Yep.
tariff.
Yep. But
So
again, we know they might change their mind again. So we shall see.
yeah, we shall see.
But anyway, folks, until next time, I'm your co-host Billy, and I got Wale. This has been the Wall Street Rundown, your source for market moves, money talk, and momentum. We thank you all for being with us. Have a good weekend. Stay sharp, and we talk to you guys next week.
All right.